All right, now we're on to Chapter 1, Excel homework number 4. And in this problem, we are again going to kind of compare manufacturers versus a merchandising company. We've got a snowboard manufacturing company and Great Foods merchandising company. And so let's see what we've got here. We've got a whole list of data here. We've got some assets, cash, raw materials inventory, merchandise inventory, WIP inventory, finished goods, accounts receivable. And remember from accounting 2 or financial accounting, if you've taken it somewhere else or it has a different name at this point. But financial accounting, we looked at the concept of accounts receivable and the allowance for doubtful accounts, which is a reduction from accounts receivable, basically the estimate for what portion of accounts receivables that we have on the books that will not be collected. And when we minus that out, that's where we get net. So that's why the term net is in there. So just FYI, a little reminder on that concept, important concept. And then prepaid expenses. So the biggest thing here, though, for our purposes when we're comparing these types of companies is really looking at the inventory. So you can kind of see here different sort of breakdowns. So this brings us to our first step in this problem. It asks us, based on the listing of current assets, to identify which company is the manufacturer and which is the merchandiser, and input your answer in the boxes to the right. And so here we look through and we see cash. Okay, both companies have cash. This company number 2 has inventory, raw materials, has WIP, has finished goods. This company does not have any of that. Instead, it has merchandise company. So I think we can pretty clearly see that this is the merchandiser and this is the manufacturing company. Manufacturer. Yeah, I think I spelled that right. And I mean, I guess to highlight further than this would be Sierra and Snowboards. This is Great Foods, basically. Maybe I'll just put that in so when we're filling these next problems out, we can keep that in mind. So Great Foods. And one thing too here is it may be a point when I'm clicking in and out, typing in these cells. So this one left click on the mouse just brings you to that cell. But if you double click into it, see, then you can get inside the cell and work in it here, or you can also type into the formula bar above. But let's just go here, Sierra Snowboard. I'm going to hit this little wrap text. That just makes the text go over so we're not falling into that cell. Okay, so that just helps us kind of understand which company is which. In step 2, we're going to complete the partial balance sheets below for each company using the accounts and balances above. So we'll start with Great Foods. And as we just identified, that's this information above. So let's link in some of our account titles. Cash for company 1, nothing raw materials. That's going to be for the other company. Accounts receivable net and prepaid expenses. So those are all of our items there. And one little trick we can kind of do just as a Excel, make this a little quicker. We are trying to just pull the exact numbers to the left of these. So if we already linked this here, we can just take this, get it to where you see the little drag icon there, drag to the left, and it's just going to pull in above what there is there. And then we can drag that down. Oh, that didn't work. Oh, yeah, because we've got spaces in between. Okay, I was trying to be fancy with it, but let's just not do that. Okay, let's just link these in. It would have worked if they were all in a row, but yeah, when you try to drag it down, it sort of gives problems. The formatting got a little weird on there too. Okay, but once we've pulled in all our numbers here, linked all those, then let's do a summation to get total current assets for Great Foods. And alternatively now, let's look at Sierra Snowboarding. So there's cash, there's raw materials, so 3 different types of inventory, remember, WIP and finished goods. And then similar to Great Foods, we've got, those same accounts there. And then let's just link all these together here. Raw materials, WIP, finished goods inventory. accounts receivable, AR net, prepaid expenses, and then we'll just sum all those together. And there we go, 214,850. And the main thing in this problem that's really being communicated when you complete it is just this idea that manufacturers have three different types of inventory again: raw materials, WIP, finished goods, whereas merchandisers only have merchandise inventory. If you sort of wanted to compare the two and say which category is similar to the other ones between the types of companies, merchandise inventory would be basically be comparable to finished goods inventory, because we're typically, that's in the status, this merchandise inventory is ready to be sold, right? Which is comparable to what a manufacturer, when they get it finished being produced, that becomes finished goods ready to be sold. These two categories are not ready to be sold. Again, if it was a baker, WIP would be the dough in the mixing bowl halfway done, and raw materials would be like the flour and salt and sugar and whatever else that's just on the shelves, or eggs in the freezer, or milk, or whatever, all that kind of stuff, the building blocks of the actual final product. So all right, well, thanks everybody, and join me in the last video next, and we will wrap up our chapter 1 Excel homework series with problem number 5. All right, thanks. I'll see you there.